Welcome back, fam. Today I have a silly beard, and so we'll have our silly FOMC meeting. We're doing the pre-show here. I love doing these streams. Honestly, guys, they're always so much fun. If you've never been to one of our FOMC meeting streams, welcome. It's gonna be a good time. They're always a good time. It's a very bland meeting, but we like to try to make them a little fun, a little interesting. So let's see, a little background today. What's expected. So it is now 1 p.m. East. We got a little bit of time till the actual meeting starts. We're going to have it here live. We're going to have some commentary. We're going to discuss during. Hopefully, Gina visits me. Gina, where are you? Pay attention to me. Notice me. But great to have everybody back. We have a huge crowd, 200 on the pre-show. We just went live. Right on. I know you guys are pumped. I'm pumped. Smash that like button for the new stream. Let's get it popping. We have the potential here to break maybe 500, 600, 700 concurrent viewers if it gets spicy. Bitcoin's looking spicy into this meeting. Unexpected, I'll say. And not expect a little spice into the meeting. Typically, when the meeting starts, we get some volatility. But here's what's going on in the markets. Bitcoin looks to be rallying at the moment into this meeting start. We could see that reverse. We'll find out. We really do tend to see price go nuts when these go on, and especially when they start speaking afterwards. Indices, equities, whatever. Markets in general are down slightly today into this meeting. Markets in general, a little skeptical over this rate hike. We've seen stocks dumping, like Netflix traded from 700 to 200 or something. Maybe we'll take a look at that. It's shitcoin status. Let's be real. Markets are spooked. These rate hikes are not really what they want. They want free money to keep printing and flowing and inflating their stock values. So what we're looking for today, as promised, and we are skeptical here about this. We don't think they're going to be able to follow through with the way stocks are right now. I'm only more confident that by the end of the year, they're going to have to walk back this rhetoric. But the markets are expecting, and we can then infer, are baking in a 50 BPS hike. Now, this isn't set in stone. They could walk it back today. They could be a little more dovish and do a 25 BPS hike. They could stick to schedule, do a 50, or who knows? We don't really understand. I don't really understand the Fed and their decision making. It seems very random and last minute and kind of like not looking ahead. They could go for a higher hike. We could see a 75 point. We could see a whole point basis increase. Here is the gist of those outcomes. Lower, if we see less than 50, markets are likely to respond in green. If we see 50, probably not. It's not a shakeup. Markets expected that. Unlikely to lead to anything too special. If we see above a 50 BPS hike, we could see some really nasty red candles today across markets. Here's what I'm digging, though. Bitcoin showing more strength, it seems, than, say, the Dow Jones, the S&P 500, NASDAQ. They actually were down only minutes ago, and now it does seem like they're recovering. So, actually, maybe we'll pull those up and check them out. That's a good idea. Whoa, check them out. I heard myself. Make sure you smash the like and subscribe. We'll be shouting out anyone who subscribes during the live stream. Anytime you hit the like button while we're live, YouTube then says, this stream's getting engagement. People are enjoying it. I'm going to show it to more people. So when you hit like, YouTube goes and shows it to maybe 5 new eyes, and that potentially brings people to our channel and to our community, to our family. I really appreciate it. It does make a difference. It costs you nothing, so please. Quick shout out to our sponsors, Femex and Market Cipher. Their links in the video description below and at the top of the video stream. Top tier crypto trading exchange. I use them personally. I'll show our live trade here in a minute. It is looking better than yesterday. And Market Cipher, you guys see me use it here every single day. It is my core trading tool. Highly recommended to any serious trader. Link in the description below. Use promo code CROWN for 15% off. There you go. Let's look at Bitcoin here quick. We'll make a new chart. Oh, for those of you watching in the future, maybe later today, look at the timestamps below. If you don't want to wait like an hour, I'll have this timestamped when it or after the live. You'll be able to skip right to when the meeting starts. So LFG, guys, today is going to be A spicy one. I have a feeling it's going to be spicy. Our trade is up. Our crow trade is up. That's unusual. It's too good to be true. I'm feeling I'm about to be wrecked. That's how it goes. What is up, Francisco Matamala and Francos? Welcome, guys. Ghost0319. Thanks for pulling off the subscriber virginity for the stream and getting things cooking. There we are. There we are. All right. Let's just take a peek at the daily here. Bitcoin on the day, looking not so bad. Not going to lie, not looking bad. April 30th close at 37.6. We did see yesterday a spooky day, and guess what? I added to my long again. I'm an addict. Don't trade like me. You guys come here to watch me lose money. Just trade smarter than me. Don't trade this way. Be smart. Added to my long down in the 37.67 area. We'll look at that right after we go over this chart a little bit. And we can see today's daily candle with 7 hours to go and an FOMC meeting, so lots of volatility potentially. Looking to close a bullish engulf daily above 38.5. That would be a great close. That would be a very strong close. I would love to see that. We'll see what the fates have in store. The weekly candle, creating a support 38.475, basically 38.5. That's going to be the major support for this week. And the weekly candle back in green after trading to a slightly higher low. Back in green, looking for a bullish engulf here. And that would take a close above 39.463. And I think that was the high of today, to the dollar, to the penny. To the penny. Never doubt the charts, man. The charts, it's not magic, but they have value. I don't give you the answers, but they have value. Look at this perfect play. It is boom. There's your monthly and weekly support. Boom. Weekly resistance to that bullish engulf. And we saw a very, very clear move from support to resistance. I did take a little bit of profit here. We'll check up on that trade in a minute. Let's just get kind of like a gist, navigate the waters before we get into it. This was a great tip-off. The previous 12-hour closed last night with a beautiful bullish engulfed candle. Bulls really showed some strength. Really showed some strength. This is the only thing I'm worried about. We saw a very similar setup right here where we seemingly kind of hit a support on the 12-hour. We bounced, bullish engulfed, and you can see we ended up with a doji and a dump. So basically, this is what I'm keeping an eye out for. It's probably going to come down to what gets said at this meeting today, but you can really see these are similar. These are potentially similar setups, and so let's be wary of this in our trades today. And you know what I should have said at the start, guys, in all honesty, it is a terrible idea to open a trade today. And that's not just for Bitcoin. This is my opinion. It's a terrible day to take a trade on anything today. There are too many moving parts here with this meeting coming up. They say they're going to do 50 basis points, but the Fed is not tied to that. They can really do whatever they want, and we've seen them do this in the past. So there could be all kinds of wild cards. Opening a trade, long or short, on anything is pretty high risk, or at least higher risk than it typically is. And so I really want to caution you guys, of course, make your own decisions, but it's going to be one of those kind of bad days to make a trade. So maybe we just sit back and enjoy. Let's just sit back and enjoy the meeting, and we'll have some laughs, and we'll take the tradings later. I looked at these trend lines actually last night. Pretty decent. This descending trend, this local one from April, lines up pretty well with our resistance here. Likely why we're seeing selling into this. Actually, I want to go back to that 12-hour because our charts are slowly changing. You guys know we've been following Market Cipher on all kinds of time frames, our MACD, RSI, and they've looked like total shit. I'm not gonna buttercoat it, sugarcoat it. They've looked terrible. The 12-hour still looks like garbage, but it's actually beginning to make a little progress. So we see money flow is kind of tipping over, looking to maybe roll back over. We're not quite there yet, but a nice little signal here is this 12-hour VWAP has really pushed. It's made a higher high, and that does give us a probabilistic edge of to look for at least more signals to the upside. Momentum looks like it's waning a little bit, but we can't really call this yet. You know, we've seen a lot of chop here on the 12. I want to see that money flow come down to a lower low or a higher low. I never know how to call it when it's like a negative. I don't know. We want to see that happen, and really we want to see on lower time frames some more stronger bullish signals to back this up. So the 12-hour was crap. It's looking a little more neutral, still leaning towards crap. And the day has been super reflective of that. This has been super ugly. One thing I don't hate here is money flow really didn't make a deep low. We can see maybe, you know, back in December of 2021, January 22, December 21, this money flow way deeper, way more scary. This is like a dump for ants. What is this? This is like barely even negative money flow. That's the only redeeming factor here, to be honest. We really need to see that same thing, that momentum move over. Money flow, at least in a little better condition than 12 hours, is kind of like already leaning in and VWAP up. So we have some kind of tertiary signs, but we're going to want to see a lot of this reflected on our lower time frames if we're looking for a move soon, right? Let's pop it to like the 8. Here's what I am digging though, is a lot of these time frames with the day pending possibly included, we're seeing bullish engulfs off of what looks like a double bottom, some kind of at least local bottom here in May. As May really, this is something that probably is easily lost in translation. This was May 1st. May has seen higher lows. It's not super strong, it's not super awesome, but May 1st traded 37.3, and then May 3rd 37.5. That is upside. That is upside. Now with this touch to our weekly resistance, we have a higher low and a higher high. So we begin to see the start of an uptrend, or we begin to see the potential for an uptrend. We did not have that. This is the big news. This is the big takeaway, dudes and dudettes, is we didn't have that. I don't know if you've been paying attention the last few months, but we have had pretty much, we had a little fake out, but with the exception of that fake out, we have just had lower highs, lower lows. This creates either a falling wedge or a descending channel. Both of those patterns we do look to break to the upside, more probable, or the probability weighs with breaking to the upside versus the downside. But without this, we really didn't have anything. We were just in that pattern. Now we might see that breakout again. You know, of course, we could just be seeing another fake out like we saw back here. We'll find out. Yeah, this is always a journey. What is up, Boris Sarik? Brian Hall, what's up, my dudes? Welcome to our family. It's great to have you. Don't forget to join the Discord, everybody. After the live stream, we always do an airdrop, so you'll get some free crypto just for being in there. Doesn't cost you anything. Keep subscribing, keep hitting those like buttons. If we don't get 420 likes for this stream, I'm just gonna cry myself to sleep tonight. So we can do it. We do it on like a random Tuesday when nothing's happening. We can do it on the big FOMC day, right? I believe in you guys. I believe. Man, that is ugly. That weekly resistance, man. Just sometimes I just sit in awe of technical analysis. It's like, I don't know. It's just amazing how price really does interact, I guess, with previous data, with charts. That's wild. Let's see the exact value, because this to me looks like the exact penny. $3.75 off. That's not even 0.1, not even a 0.1% margin of error there on that weekly resistance. I'm hating this 4-hour candle though. That is ugly AF. 4-hour momentum is up. That's not the end of the world. That's okay. Market ciphered on the 4-hour. I don't like where this VWAP is heading. We do have, I cannot draw. We do have a slightly higher high in momentum here after a higher low. So we do have a little bit of an uptrend potentially building there, but it's not strong enough for me. The thing I think that's the most compelling is our money flow lows. We do have a higher low on the 4-hour. You can see that right here. And typically when we get that, whether it's a money flow high or money flow low, we look for that time frame to roll over. So fingers crossed here. We do have the momentum suggesting it. VWAP is really the only kind of argumentative or counter indicator here. to that 4-hour bullishness. I like that we're seeing the lower high and now maybe a lower low, higher low. I don't know. One of them, right? Let's go down to the hourly. Woo. 16 minutes into the hour after rejection from that weekly resistance of the bullish engulfed line, we may be trading into a bearish engulfed candle into the FOMC meeting, which really dumps on the narrative that we started this stream with. Whatever, that's life. That's life, right? Let's add this as a local spot because before this meeting starts, I would like to see price back above it. And let's also do one of these bad boys. Let's put our FOMC meeting on the chart. So here is so for those of you who've never watched one of these, the Fed, I don't know why they do this. It's very strange, but the Fed has a closed door discussion. Then they release the notes at 2 p.m. And then at 2:30 p.m., they like do the speech. So at 2 p.m. we'll actually be able to Google, and we all kind of collectively together Google it, try to find the answer. We can get the rate decision before the announcement. And then we like to listen to the announcement because the tone and the language they choose actually is important. If Powell shows kind of hesitance or uncertainty, reluctance, the markets do read into that and it does have an impact. So there's a lot of data here. It's very meta. So let's do FOMC decision public. We'll put this down here at the bottom and we'll make it smaller. And then we're going to copy pasta and we're going to put this one. This will be when Powell's live. Powell's live. There we go. Cool. So we have those on our chart and I want them to be white because white is kind of my neutral color in my charts. There we go. There we go. Okay. Down to the hour. Not great. Not great. Not loving it. We can see this is very clear on our MACD. Waning momentum. So we had selling momentum as we see by these red bars. That selling momentum looked to have apexed, began waning off, almost moved into positive, into buying momentum. But we got our nasty little fake out candle here as momentum pulled back down and started accelerating again. Something to take away from this though is this candle is only 20 minutes out of a hour-long candle, 1/3 complete. By this candle's close, this could be back up and buying positive momentum. It has not closed, and so we cannot count this candle yet, but I don't like where it is now. That's going to be my 2 cents there. Oh, this is a 30-minute candle, so it's only got 10 minutes. Never mind, I thought we were on the hour. 15-minute, man, we're seeing this same kind of triggery wave. This shallow momentum to the upside as we zoom in. I don't love it. I don't love it. That puts you in the territory of coming down here. You're going to pray for a higher low, then move back up, or the always powerful but not doesn't happen very often. We could see a catch above zero, and actually that's what very large, strong rallies are born from. So fingers crossed on that. 15, nothing is really looking strong. 5-minute move back into selling or into negative money flow with VWAP really pulling down. I'm not seeing short-term upside. That weekly resistance really slapped some of the power out of this move. This is pretty cool. So if we use our Fibonacci retracement and extension tool and we use our low swing to our high swing, we're on the 5-minute. So this is not like predictive of anything long-term, just very short-term price action. If we use our Fibonacci tool, we see our 618, our golden retrace right here. That lines up, if you look, almost perfectly with the hourly bearish engulf horizontal we just placed at 38,960. I believe that's 38,954. Interesting. To me, that would give me, if I was scalping, and I would not be scalping today. Again, reminder, today is going to be a very dangerous day to take positions. If this was a normal day, I would probably look to scalp long there. That is a very nice crossover of both the 618 retracement, the golden retracement, and that hourly line that bulls are looking to defend in this very short-term, very small uptrend. But we're not really seeing it. We're just not seeing it. 5-minute, we're not seeing anything especially bullish. 15, 30, we all have these kind of lower high momentum swings. It's not ideal. It's not ideal. Would not surprise me. Would not surprise me to see even a test back at 38.5 at some point. Actually, this is a nice place for it to bounce though. On the hour, you see that consolidation here, building resistance, rejected, broke resistance, hit a stronger resistance. This could be testing it as support. We could see that continue out in the same pattern. Man, please hourly close above here, please. I'm gonna read the chat here in like 2 minutes. I just want to get through a little bit of TA because I know a lot of you come here for the best TA on YouTube. Easy, I mean, no question. The best live TA on YouTube. Let's check in on our trade. This trade was bomb earlier. Thank you, Market Cipher. This trade was taken on Market Cipher, or not Market Cipher, on FEMX. Links in the chat. Check them out if you guys. They have spot derivatives, APY yield. They got it all. I've been using them for years. Then we partnered with them in April. Now they sponsor us. Love them. I don't know. Trust them as much as I can trust an exchange, which of course is a finite amount, but they've been around for a few years. Anyway, this trade, it was up. We were up about $250, I believe, on this swing to 39.5. So we did fill some of those TPs. I've been sharing the TPs. I've been sharing where I'm adding and stuff with you guys every step of the way on this trade. We filled some of our take profits. Let's see. Very small contracts. Can you guys see? I always have trouble with this. Yep. These reds are shorts, aka take profits on our longs. You can see down here even. I added pretty bigly. 25 contracts at 37.6. No, 50 contracts at 37.6. 10 at 37.750. So we really increased the size of this position. It went from, I think, 200 to 250 contracts. That's a 25% increase. Really knife catching. But I had confidence of a bounce. I don't know if that bounce is really going to continue out or have enough fuel to make significant upside. But I was very confident in a bounce from this level. When I saw the sell-off, markets just spoke to me. This is going to bounce and then maybe sell off more. We'll see. So that's why I also added these very small take profits. You can see one contract 38.4, one contract 38, two contracts 35, 36, 37, 38.8. Just to shave off some of that weight. I didn't want to be that deep in. And that by adding there, that allowed me to kind of shave off at these lower levels. It brought our average on our trade down, and it gave us a little bit more to work with. We did fill two decently sized orders at 39 and 39.4. Between those price ranges, we sold off 22 contracts. So we actually, if you think of it this way, FEMX, it's like one aggregated trade. But if you think of it this way, we added 25 contracts at 37.6, and then we got rid of 25 contracts at 39.4. So that was like a 3-ish% upside, but we're on 7x leverage, so that's a 21% gain. Not bad. Not bad. That's what, those are the changes that have gone on here. I don't think I have adjusted anything really about this trade since we added, and then we took some profit. Let's take a look at what our chart looks like. There we are. Here we go. This is the whole trade. This is our whole trade. We can see our stop loss still down here, untouched. Our trade entry average. Why can't I? There we go. I want to be able to point. Our trade entry average or whatever is now 38.3. That did originally start, I believe, at 36 or 37. We brought it down a few hundred. And these red dotted lines are our next take profits. And if you're observant and have good eyesight, you can see that these take profit orders get larger the higher up we go. We're looking to completely be out of this position if price makes it up to, say, 51. We're going to be mostly out at 48. And we're going to look, I mean, if this goes the way we want it to, I don't know if it will, but if it does, we're going to look to take a short position in the 48 to 51 range. And that isn't going to be a short because we're betting against the market. It's going to be a short to hedge our portfolio. And when I say our, I guess I mean me. Do your own research, not financial advice. You know how it goes. Make your own choices. Don't blindly follow me. You might see me, it's like, oh my god, this is a $10,000 long. If he's so confident, I'll go all in on a million X leverage. No. This amount, I am okay losing. Most people, maybe not okay losing that amount, right? That amount might be $10 to you. That amount might be $1 million to you. I don't know. Everyone's position is different. Everyone's portfolio is different. That size needs to adjust based on your position, your portfolio, your investments. Right? Right. Good job. All right, let's pull up the chat. We'll go, oh, you know what we want to do? Let's pull up the chat, but let's also gloat a little bit. I don't gloat often, but when I do. You guys saw yesterday, and I'm sure you saw in the news, some stuff about Crypto.com and their card. I do believe they've walked back their decision since yesterday. I'll have to really look into that. But we look to take a long on Crow because we're maniacs. That's right. We're psychos. There's a little more reasoning than that. Not going to go into it, but we have been waiting for this 28 cent area for a year. Since, well, I guess not for a year. Since like November, December. Miss Teen Crypto's here. The beautiful, wonderful, just beautiful, energied human. Such a good energy, that person. You guys follow her on YouTube, on Twitter. Check her out, Miss Teen Crypto. She's spreading adoption to Gen Z. She's my personal friend. We play Supremacy together, or we're going to. So, Crow. We were waiting for, I guess it wasn't a year. How long was it? 180 days-ish. So we on this stream sniped this, and we have some patrons and some members of our community that made a just ridiculous profit on Crow. We identified this pattern. We saw, hey, this could be a flat-topped ascending low pattern. I cannot draw straight lines today. Ascending low pattern, right? We said this could be it. If we break our lows, we want to get out of this position, but so far we haven't. We keep seeing that flat resistance come into play. And we dubbed that basically 28 cents. Well, we broke 28 cents. We used our Fibonacci extension tool. We sniped out a 92 cent target. I'm not going to say we called the top because that's a silly ego thing, but we dang well sniped a good take profit. And on the day that we hit this 92, 93 cent area, I said, all right, I'll buy back in at 28 cents. At the time, people were like, you're stupid, Tom. 28, it's never going to 28 cents. This is going to $1 million. It's never going to go down. And so here we are. We hit 28 cents, 24 hours ago, a little bit more, 24 hours ago-ish. I filled an order at 28. I had another order, a larger order at 25 cents. Didn't hit yet. It still could. It still could. But I said I would do it, so it's... Ooh, kind of stubbornness. An hour before, that noise was actually from their stream. An hour before this starts, they start playing this music. Why? I don't know. We'll mute that crap. Actually, you know what? We'll mute that, but I'm going to put an alert on my phone because last time it started and I had to like scramble to get it up because I didn't realize it was the time. I'm setting an alert on my phone. There we go. Now we won't forget. 27 cent or 28 cent order filled. We also bought into the FUD. It just seemed really fuddy. I don't know. I'm looking to add at 25 if it falls. I'm not looking to add after that. If it falls below 25 cents, it's likely going to 17, possibly down even to 10. I'm not going to chase that knife down. This is a small position. I'd like, if it fills 25 and falls to 10, I just don't care. I'll like maximum be down like $200 or something and I just don't care. What I'm really looking for here is I'm looking for a return to either the golden ratio, the 618. That's about 40 cents. That'll be almost an 100% gain, more like a 60% gain. I'll probably, here's exactly how I'll play it. I haven't set these orders, so it could change just because I might forget. But here's exactly how I'm looking to play it. I'm looking to take that 28 cent position. I'm looking to take profit at 40 cents. Okay. I'm looking to take profit, meaning I'm going to take out my initial principal so that whatever I have left, that should be 40% of what I buy-ish, I think. I'm just doing this math in my head. I'll have about 40% left, but it will have a zero cost basis, meaning I can watch this go to zero. I don't lose any money. I've taken my money back out. But on the off chance that it continues back up, say it goes to 47, 48 cents, or even all the way back. It can go maybe even all the way back to 65. Who knows? Let's see where the new 618 is. It's about 60. I'll look to lock in profit at each one of these resistances. And if it somehow breaks through its previous high, I'll still have some percent of my position. It'll probably be like 10% or less, though. It'll be very small. But I'm looking to chop this out or just hold this small position down into doom. I've done it before. I'll be all right. All right, we're going to look at the chat. We're going to chat with you guys. Let's put Bitcoin on a low time frame. Here we go. We got 28 minutes. 28. That's right. 28 minutes until they go live. No, until we know the decision. We have a poll going at the top. It almost has 1,000 votes. Holy, how many people are here? We have 600 people watching today. What a day. Welcome, fam. I don't know if you guys got tricked into this because of the FOMC meeting or if everyone's just hyped today. I don't know. What's up, George? George. Don't know, but welcome. We do this every month because every month there's a meeting. We do a little analysis on the market beforehand. Then I like to call it the pre-show. And then we watch the meeting live. I like to try to make it entertaining. Sorry if it comes off cringe. These meetings can be really boring, so we like to spice it up or at least make it a little funny if we can. My girlfriend Gina hopefully will be speaking. Fingers crossed. We will know in 25 minutes what the decision is, and at 2:30 p.m. East, we will see Mr. Powell speak live. I can't believe we have almost 1,000 votes on that poll. Keep voting. I'm impressed. You guys are great. Because there's so many people here, so many new eyes, if this is your first time here, and even if it's not, please subscribe. I'll shout you out. Join us. We're live here. I make so much content. You don't have to watch all of it. You watch as much as you want or as little as you want. But we go live and we're looking at crypto markets, at markets abroad in general, every single day. Every single day. I think I put out, I think I stream plus short videos or uploads on average maybe 2 a day. So we got a lot of content. We would love to have you. Very importantly, join the Discord. That's right. Join the Discord. After the live stream, we'll do an airdrop, so you will get some free crypto just for being in the Discord, keeping up with our streams. I appreciate you guys being here. Last but not least, smash that like button. Let's pump the likes. Do we have 420 likes yet? We are very close to 4. We are dangerously cheesy. We're dangerously cheesy. We have 407 likes. 13 likes to 420. Then we can all blaze it together. We can all enjoy. That's right. We can all enjoy the 420. 1 second here. Something's being weird. I don't know. 420s and such. We can get it. There we go. We blew past it. Well done. Give yourself a pat on the back, everybody. 450. I mean, I don't even know. What's the next number? 690? Nice? I don't know. All right, what's up, chat? Matt C. Ooh, Shannon Sharp. Is that Shannon Sharp from BitBoy Crypto? Is that Shannon Sharp from BitBoy? I don't see her. Oh, yeah, I should probably scroll on a different one. There we go. Technical difficulties. What's up, Galen? Chiz. I like cheese. Miss Teen Crypto says subscribe. See, she's beautiful and smart. That's right. What's up, Chris Liu? I went to high school with a kid named Chris Liu. If you're that Chris Liu, where you been, buddy? Body Meckle, football player. I don't know. Mr. Poppy, how's Catcoin? Oh man, I don't know. Get your hoodie? Maybe. It's in the wash. Shannon is from BBC. Where's Shannon? Who's Shannon? Shannon! No, it's Shannon Sharp. That's Shannon from BitBoy Crypto. She's a mod there, right? Tom has high quality content. Spicy Day. What's up, Renee? John Shanks. Spencer, Mad Professor. We got all the boys. We got all the boys and gals. We got people subscribing too. I7 Mad H1. What's up, my friend? Minahan, welcome Minahan, to you especially. Red Baron, Matt Ostapuk, Afra Mahood Mood, Magic Pogo Stick Brockman. These names are great. Boris. Oh, we got Boris. We're good. We got Boris. Never forget about Boris. Great names. Keep them coming. Keep subscribing. Keep smashing the likes. Chart everything. Tom Demand. Your demand, John. Luke. 69. Oh, Luke, dude, that was such a missed opportunity. A 69-point increase. Nice. Lifer is crying. Why is Lifer crying, Lex? I'm going to be honest with you guys. I do not watch other streams, really. I'll pop in on live streams, but like I don't watch like videos and stuff. I don't have time. I don't know. What happened to Lifer? Is he all right? Hope he's all right. I don't know. You subscribed, Fomonaki. Thank you for subscribing, bro. Good to have you. What's up, Eros? Love your channel. What's your take on Sand Token? Oh, you don't want to know. If you're a Sand Token bull, please look away. Please look away. You're not going to like what you see. I hate to say it. You're not going to like what you see. Sand Token has a lot of hurdles ahead of it. It is a lot of hurdles, man. We called the breakdown here. We called the breakdown. Didn't quite reach 180, reached 183. Looking for a back test of 255. And honestly, yeah, it's possible that on that back test of 255, it flies up like a magical bird. But much more realistically, and the probability favors rejecting from that flat-bottomed, awful bear flag type thing. And we're looking for that lower low. Sand, this took forever. You can see that actually when we first drew this, we were expecting it to drop out of it much earlier than it did. It managed to consolidate for another month with lower highs. That was the tip off. Finally broke. It's playing out on this is just a classic bear flag for crypto. If you look up bear flag, you're not going to find this in the dictionary. But for crypto, this is bear flag. That's it. I'm going to make it look prettier for you guys. Classic crypto bear flag. What does that look like? Well, it looks like this. It looks like descending highs. Got to make it pretty. Sorry, my OCD just kicked in. Got to make it look pretty. There we go. Descending highs. We saw that here. 1, 2, 3, 4, and 5 lower highs. That by itself actually isn't that doomish. Lower highs. They can be okay. The problem is in crypto, when you combine them with a flat bottom support, you see a downside break almost every time. I would say 60% of the time. Sand is not in a great position. It does have incredibly strong, or it should have incredibly strong support at $1. It doesn't have to go to $1. It could, like I said, magically like a bird, fly up out of this pattern. It's happened before, but I am bearish. I'm bearish. If we can like get back up and like break maybe March's high at like 380, then maybe you're back in business. Maybe then you have like some kind of like, you know, like inverse head and shoulders-y Frankenstein pattern. If I was in a bad position on sand, I would probably look to jump out of some of it. Not all in, all out. We don't do that here. But I might look to shave off some of that position if we see a back test of $2.55. That was a flat bottom support. That might be a little escape hatch. No matter what you do, don't make emotional decisions. Don't make decisions in a panic. Stay calm and rational. That's right. Always. How do I make this visible? There we go. Always stay calm and rational. I'm going to hit play on that, but mute it. Whoa, 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 whoa. Man, chat's popping, dudes. What is up, everybody? What is up? It's good to have so many people here. It's been a while. Where have y'all been? You've been outside in the sun or something. That's definitely... Diego's correct. We're here today because we're going to listen to Chirpow. Chirpow. Please a question, Chirpow. Shadow Band. Yeah, you never know. If we're Shadow Band, we got a crazy amount of people here for Shadow Band. Gallon, fun fact, Theta had the same pattern. as sand. And it broke down before sand. Thoughts on Solana? Dude, Solana, I do not have a high opinion of blockchains that have downtime. There you go. Been watching the tube. Thank you, Clint. What is Mbox Mariana Romero? How you doing? You are very handsome, says Pong Saturn. Well, thank you. You have a handsome soul, Pong. Thank you for being here. Been here the whole time. Appreciate you. Isn't that a bear flag too long? Technically, isn't that bear flag too long? There is no limit on... Bear flags don't have to be like a certain length or anything. They could be short or long. Bitcoiner, thank you for the 2, my friend. Mr. Matt C. LFG, bro. It's Chirpow Day. I'm hoping to propose to Gina today. Don't tell anyone. I'm going to propose to Gina live. Hoping she says yes. That's right. That's right. Mr. Poppy, what's up? My portfolio. Mine is not so much. Not so much. The meeting is important to pull an all-nighter for it. Ray J, if you're pulling an all-nighter, man, you only have to stay up like another 18 minutes. Because we'll know then. You don't have to listen to it. You get some sleep, right? The boom is back, baby. That's right, Syrian. Near far. Tom, fit fee. I don't know what that is. There'll be a dump, or will there be a dump, into the decision if it's 50 or 75. So we talked about this a bit in the beginning. This is my speculation. We have, like, the Fed can do whatever. They don't have to do what they say. Like they said 50, they don't have to. Okay? 50 is probably the most likely outcome. That's what they said. They're going to have like reasoning, or they're going to have some motivating factors to change that. So 50 is the most likely outcome. If 50 happens, markets aren't really that likely to be affected. They've been baking in 50 for months now, right? It's all month, actually all the way back to January, when they announced they're going to be doing 50 BPS a month. Markets won't be surprised. If the Fed takes into consideration the stock market, which is, I don't want to say is it's very likely they take it into consideration. I don't know how likely it is that they will change their decision based on it right now in this month. I'm speculating they will by the end of the year. But if they take a look at, say, Netflix, that was trading up at $700 in November, now trading under $200 in April, increasing rates is only going to make more sell pressure on stocks, on equities, etc. So does it look like they want extra sell pressure here? We don't know. We don't know if logic is going to be the deciding factor here, right? They might just say, nope, we're going to keep doing what we're doing because we said we would. I don't know. If I was the Fed someday, right, when I'm the Fed, the Bitcoin Fed, I absolutely would not be increasing interest rates. I would absolutely be putting rates to 0 or negative. I would be printing and deflating the dollar into oblivion. That's what I would be doing. Why? To avoid a global economic crisis. You can say, oh, but that has its own problems. Yes, it does. But what you're not realizing is part 2 of that plan is when I rug pull the dollar and introduce digital dollars, and you trade in your dollars for 1,000 to 1. And now I have fixed the economy. Thank you. Thank you. That's so oversimplified, and there's so many problems with that, but that's what I would do. Stock, dude, look at Netflix. It's down 73% since November last year. That is complete shitcoin status. 73% dump in only a few months. Increasing rates here is rough. So they may decide not to. So this is another outcome, is they say, okay, we'll do a 25 BPS, or we'll do a 0 BPS, we'll do 50 next month. In that outcome, markets are very likely to rally. Equities are very likely to rally. The dollar is likely to take a hit, which, if you've been watching our live streams, makes a lot of sense. We've been looking literally for the dollar to find resistance here, to sell off, to cool off a little bit. Let's pull off the dollar. Literally, this is the exact point that we've been waiting. Boom, there's your green line, right? It moved up to 103.82. We've seen 1, 2, 3, 4 days of sideways trading below resistance. Trading below resistance like that, actually kind of bullish. Ignore that. In crypto, it's a bullish thing. In the dollar, I have no idea. But we're expecting the dollar to find some kind of resistance here. Why? Well, our indicators might say something, but in reality, the dollar has just been on a parabolic run since the start of 2021. This is Forex. Here's the thing. We can see this in crypto. We can see this. We can even see it in stocks. But this is Forex. This is a currency. This is the world reserve currency. They're not the same. They don't typically go parabolic. Everything that goes parabolic eventually collapses. That is the nature of parabolic growth. You have periods of expansion, periods of contraction. You cannot have indefinite parabolic growth. It's mathematically impossible. So to see the dollar fall down a little bit here, maybe retrace, I mean, that doesn't necessarily mean even the rally's over. You know, it could then go on to break 103, set some serious multi-decade highs, who knows? Or maybe we see the Fed ease off here. We see stocks recover and we see the dollar dip back down. Maybe it comes back down to like 96, this 0.5 retrace. We can see 1, 2, 3. Actually, it probably even goes farther back. Probably it goes even farther back, yeah. We can see that's been a pretty historic value for the dollar. It may go back there to find support. That would be my guess. If we see less than 50 today. Or there's one more outcome. See, doesn't this just like look right? It's like the dollar reaches a high, it falls to a lower low, it reaches a lower high, it falls to a higher low, it reaches a higher high, maybe now falls to a higher low. Kind of just looks right. But there's one more outcome that's possible today. And that outcome is what I believe, honestly, to be like the least likely, other than like 0, because they're not going to, I don't know. 0 doesn't seem very likely today because they're crazy. That other outcome is that they go above a 50% BPS hike. 75% or a full point. In that scenario, things get very weird very fast. They've announced a 50. They've baked in a scheduled 50 for the rest of the year every month. To do a higher hike is going to really throw markets through a loop. Markets are not going to be happy. We will likely see dumping across the board. Maybe commodities like oil, maybe wheat, soy, like these kind of things. Maybe they go up, but like all stocks, just everything, gonna see blood. That's why I think that's the least likely. It's way too big of a shakeup for what is already a pretty fragile market at the moment. So there we go. There's like the kind of like the recap of the outcomes today. We have 350 people watching. This is amazing. This is amazing. Good time to shout out everybody. Everybody, welcome. We've had a lot of subscribers and we still have 11 minutes. So for those of you joining, if you haven't been here, also in 11 minutes at 2 p.m. East. Yes. What is this? What are they doing? It's like a, let's watch this. This looks like propaganda, like Fed propaganda.
Decisions at the Fed are made by the Federal Open Market Committee,
which includes all 7 members of the Board of Governors and presidents from the Reserve.
This isn't it.
This committee meets regularly to assess the conditions and outlook for the economy.
That looks like Jeff Bezos.
In addition to conducting monetary policy, the Federal Reserve also helps to supervise and regulate the nation's banks and works to promote a stable financial system for consumers, communities, and businesses.
The Fed also works with communities, nonprofit organizations, and others across the nation.
Does anybody want to watch this? We're going to do a new poll.
Promote equal access to credit and advance.
We're doing a new poll. We're ending that last one. Looks like more than half of us are thinking 50 BPS points. Should we watch this propaganda? Should we watch the Fed propaganda? Oh, I should have done that as a poll. All right, we don't even have to do a poll. We got like 800 no's. Not one person said yes. Shout out to Jeremy Schmidt just for being that guy. Just for being that guy. All right, a few people. There's like a few yeses, but I think no's win it. This, I promise you, it's gonna be so stupid anyway. Here's what we'll do. I'll mute it, and we'll just have them like doing hand gestures in the background, like the Fed is the one who ruins everyone's retirement. Haha. We're in charge of unemployment and inflation, and that's an impossible task. Fun fact, I guess it's over. I don't know. I just like hit play again, and now it's not there. That's weird. Well, that answered its own questions. It's over. That was fast. What's up, Miles G Investments? With the checkmark looking fresh, Fed will pump the market. I don't think so, unfortunately. That is not a likely outcome unless they do what we've been kind of like speculating, walk back their hawkish tone. I mean, it will happen. It will happen this year. They will walk back their hawkish tone at some point this year. I don't know if that'll be today. It could be. Your guess is as good as mine. So here's what it is. I got interrupted by that propaganda. 9 minutes from now, in 9 minutes, we're all going to in fact, open your Google browser now. Okay? Open it up, get a tab open, get ready. In 9 minutes at 2 p.m. exactly, we all are going to scour the internet and we're going to see who can find the decision first. Because the Fed has a closed door meeting going on now at 2 o'clock. They release the notes. It's just goddamn stupidest system I've ever heard. It was designed by a kindergartner. Then they release the notes at 2 p.m. And then at 2:30, they have the live announcement. They have like the live press announcement. So at 2, though, we're able to find out what the decision is before they even speak. So we like to do that here. Whoever finds it first gets a high five. That's right. Are they allowed to sell their own equities before they announce? I actually do not know the legalities on insider trading that are involved with being a Fed member. But if I know anything about U.S. politicians, I think I don't know. It's been legal, probably still is legal. That's ridiculous. Can you even believe that there are politicians that are like, we should be able to insider trade? Like, why? Like, what logical reason could you ever have to like back that up? It's the most ridiculous thing I've ever heard. Ooh, we got more subscribers. Mr. Just P has subscribed. Excellent. Big Tuna Crypto. I'm sorry, Mr. Super Chat Man. He says, let's go, bro. Big pump coming soon. I hope so. That'd be dope. And we got the LFG Tom. If you haven't subscribed yet, subscribe now or forever hold your peace. Smash the like button. Every like, every vote, every subscribe, and every chat message counts as engagement. And when you engage the stream, YouTube shares it. And clearly you guys are killing it today because we have almost 1,000 viewers. That's in right. You guys are killing it. Keep it up. You're doing awesome. Let's get to 690 likes because that's nice, right? It's just nice. What if it's only 0.5? If it's only 0.25, I think that the markets will we'll see green. I don't think it'll be like an explosive green, but it'll be a green. The markets will have a sigh of relief, which they need. I don't understand. I just don't understand why. I'll just move on. What's up, Mostly Average? Thanks for subscribing, my friend. Thanks for subscribing. 20.25 reduced 45K today. I'll take it. Sure, pal. Will be joining us soon. Sure, pal. Sure, pal. Sure, pal. Mr. Sure, pal. Mr. Sure, pal. I have a question, Sure, pal. I just want to see Gina. Guys, I'm not going to lie. This is all just like a big ruse so that like someday I can get Gina's attention. Gina, please. If you're out there, Gina. What if one day Gina watches this? Like one of ours. Wouldn't that be awesome if she like had a tab open and was like watching it? That'd be wild. What's up, Raphael? Cheryl Drew. We've got 6 minutes, guys. Prep your Googling. We need all the best Googlers on the planet here. Oyton Azu Dogru. Welcome. Welcome, welcome. That one just played and I don't even see it. Someone else subscribed. Welcome. I think it started with a T. Let's pop open here. Let's get some Coin Gecko popped open. See if anything's moving. Zill. Someone was saying Zill earlier. Zill doing a little moving. Cheryl Drew, what's up? Raphael Dimapi. There it is. Till Threnum. Welcome. We're gonna see what's popping. Although we don't have a lot of time. I don't wanna miss it. Maybe we won't see what's popping yet. We'll wait. We're gonna hold off. Let's check in on our trade. We're down $100. Well, we're up, but we're down from where we started. Crow seeing a little red. Let's zoom in on this Dixie, actually. We should have the Dixie zoomed in. Ooh, a little symmetrical. You know, I didn't see this. On low time frames, the dollar actually trading as a symmetrical triangle. That is the least definitive pattern, in my opinion. I don't think symmetrical triangles have any edge. I think they have no edge. You can argue with me all day if you think otherwise, but I just have never seen them have an edge. They're like the biggest trap of like, they're a bull flag. That goes up, that goes down. Nah, dude, no edge. What's up, Lorinda? Lorinda, shout out. We've got 1,000 watching. What is this, like Q1 2021? What's going on? Who the heck is Gina? Hey, keep her name out of your mouth. She's my love. No, she's Gina, for those of you who don't know, is my pretend girlfriend. She's one of the speakers typically at these Fed meetings, and she is kind of nice on the eyes, if you know what I mean. And she's very smart, so I like it better. Bitcoin's doing a little pumping. 39. We've got less than 4 minutes, guys. Get the Googles open. Get the Google. Gina for president. Gina for my wife. Gina for first lady, and I'm the president. Ha ha ha. Fed rate decision. All right, get your Googles ready. You can even like type it in now and then hit enter after the 2 p.m. stroke, because it gets published on random news sites like really quickly. Really quickly. I'm liking that Bitcoin's liking it though. Bitcoin's like, yo dudes, we got 2 minutes left and I'm feeling pretty good. All right, before this epic triumph, have to do it. Shout out to our sponsors again, Femex, Market Cipher, links in the video description below and in chat. 2 of the most quality in the industry. Femex, an amazing exchange, spot derivatives, yield staking. Market Cipher, you see me use it all the time. My favorite indicator for charting. There we go. Out of the way. It's almost Gina time, baby. So get ready to refresh. Let's put it down to the 1 minute. Let's put it down to the 1. When this bar opens onto the white line, we have to all Google as fast as we can. That means you have 1 minute and 45 seconds to prep, which also means you have 1 minute and 45 seconds to subscribe and to like the stream and to jump in the Discord. That's right. It's going to get spicy. I love that Bitcoin always seems to kind of like do something right before. It makes these streams way more entertaining, like wildly entertaining. 392. All right, I'm not going to get excited unless it gets above 392. I'm out of alerts. TradingView, if you're watching this, give me more alerts. I have given you thousands of dollars, and I want more alerts. 400 is not enough for someone like me. I'm a man who needs maybe thousands of alerts, maybe hundreds of thousands, tens of thousands. Okay, I'm getting trolled. I don't need all these T-fuel and theta ones. There we go. All right, here we go. 51 seconds. Get your Googling ready. We're gonna break this news. I'm gonna get a tweet ready as well. I'm gonna break this news. Fed rate hike BPS. There we go. Uh-oh. We had all that excitement. Now she's chilling out. Let's do it. I'm getting my Googles ready. 13 seconds, everybody. Start your Googling engines. LFG. Let's go. Hey, never say anything rude about Gina. Not near me. All right. We're going to have hands. And you're making me miss it. So we have to find rate decision. Little pro tip. You can sort by last hour on Google, and you can find more relevant recent search results. All right, I see 9 minutes ago. These can't possibly have it unless they got it early. Nope. Keep refreshing. We got to get it. First one to get it wins a prize of gratitude. I'm refreshing. Come on. It's always a rush. It's like a rush to find it first. Latest news. Let's go. 1 hour ago. 3 minutes ago. 4 minutes ago. Come on, news. These people usually have this out in like 15 seconds, like flat. Come on. I mean, we all know it's going to be 50 BPS anyway, probably. Come on. Come on, come on, come on. 10 minutes ago. Tools. Let's see, like 24 hour, and then we'll go back to 10 minute or to past hour. Man, they are slacking today. Maybe Mr. Chirpow. Maybe Mr. Chirpow is sleepy because he's old and he didn't get the notes out in time. I don't see it yet. See what Bitcoin's doing. Bitcoin's liking it. Whatever the decision was, Bitcoin, I think that's a thumbs up from Bitcoin. I think that's a Bitcoin thumbs up. Has anyone found it? Has anyone found it? 50, 50, 50, 50. Did we find it? Did we outsource that quickly? Did we outsource it? See, this is what a team, a crew of people can do. Look at this power. People are saying 0.75. People are saying 0.5. I don't know which is true now. I tweeted out 0.75 or 0.5. All right, I see from New York Times, half a point. The news is trickling in. The news is trickling in. Can we confirm? 69, Aaron's correct. We were all wrong. It was a 69 BPS increase because nice. Whoa, whoa, whoa. Fed delivers biggest rate hike in more than 2 decades to curb hot inflation. Yep, it was a 50 point. It was a 50 BPS. 50 BPS. Ooh, 420 BPS would have been cool too. Yep, 50 BPS. Let's look at it. Federal Reserve raised interest rates on Wednesday by 0.5 percentage point for the first time since 2000. As the fight against elevated inflation heats up, the Federal Open Market Committee raised its benchmark rate to an average of 0.75 to 1 from 0.25 to 0.5 previously. Head of the meeting, Mr. Powell, hinted the last month that a 50-point basis increase in the Fed's Fed rate was on the table. The Fed chief also backed the idea of front-loading more than one at future meetings. These people are madmen. They're madmen. Absolute madmen. Is there anything else that came out? Google, you have failed me. Like, why is this 5 minutes ago down here? Expected to announce. What a flop. What a flop. Let's check in on the corn. Corn is right about where it was. Did it close? Nice. Nice. So if you were here earlier in the episode, on the hourly, on the hourly, we were hoping. We didn't really see any kind of short-term bullish signals. Wasn't looking too good. 5 minute, 15 minute, just like really nothing was looking too hot. But what we were hoping for is on this hourly close, a close above 38,960. Why? Because we had a beautiful green candle. Then in the last hour that just closed, we had a nasty red candle that traded below the previous green candle. And if it had closed below 38,960, we'd have a bearish engulf. If we zoom in, we see that with just what? 39. In the last minute, price settled up just above it. So that is a good close on that hourly. Bulls have defended against a bearish engulf on the hourly time frame. And awesome. And awesome, dude. VWAP now trending up. We have a little pinch. So we talked about these two scenarios here on the 15-minute for Market Cipher. Momentum, if we didn't get that hourly close, likely to sink back down into negative. If it had crossed into a lower low, we would have expected continuation to the downside. Could have caught, and then that would likely make for like mostly sideways and down price action. Or we said this isn't super probable based on what we're seeing. We could see that cross up, and this is what strong rallies are made of. So this is the 15-minute. This is not going to impact. I know it's not going to the moon from this, but we may now see some short-term upside action, which we were not expecting earlier. And the 5-minute might be agreeing. This is a little ugly, but this is a higher low after a higher high. So we are seeing on the 5-minute a little semblance of an uptrend. I'll take it. It's not that it's like super bullish or anything. Like the 30-minute's still ugly, but you can see the potential there. Boom, right as we looked at it. Momentum crossed over again. if the hourly looks different, we might actually have ourselves a little rally on our hands. No. All right. Interesting. In the last hour, things have gotten actually considerably better looking, which isn't a big deal because things looked really bad. Now they're looking a little more sunshine and rainbows. It's going to be interesting to see what the Fed actually says. So the announcement and like the rate, the literal cut is one thing. That is important. That's one thing. But it's, I would say, and the reason we watch them live here, they'll be live in 23 minutes. The reason we watch them live, they're doing another one of their propagandas, is because more importantly than the act, well, maybe not more importantly, but at least as importantly and important on its own, is the tone, is the language of what Powell says. Is he sweating? Is he nervous? Does he let something slip? There's things that you can read into in the language, and we do that here live while it's going on, and that's going to start not too long. So what's up to our new subscribers? Let's eat. Attila Fabuk, Neil Bakik, Alcade, Thesis himself, Pariah the Boneless, in all caps, I like that name, Dennis Didkov, Obe, Leziskuf, Anthony Smith, Mark Rebegila, Lorinda Jaubert. Man, we had a lot of these. Welcome. It's good to have, look at this propaganda. What is the Fed? The Fed is your friend. We tried to keep you poor by being irresponsible with our fiscal practices and protecting the rich people. That's what it should say. And they're just playing the same thing again. What up, Eamon? How's the weather over there in Dubai today? Mr. Daniel. How you doing, Daniel? Crypto Hoarder. What's up? Hey, wait. Nobody, or probably someone did, but I didn't hear it. What happened? Is Crypto Lifer okay? Someone said something about him earlier. Multiple people. More than one person said something about him earlier. Is he alright? Does anyone know? Where's Gina? Where's my gal? She's coming. What's up, Looney? Creepy. You must love the Fed. Yo, MrOpticalArt.com. There's a name. How have you done? How have you been doing, brother? Optical Art. I don't know if you guys have heard of Optical Art. He was back in the day, man. I remember watching his streams. He's been on YouTube a long time. How you doing, brother? Good dude. We do TA differently, but as I always say, there is no one way to do it. There's no right way. There is just the way that works for you. Appreciate you, Matt Young. How you doing, man? Vali. Hello. Only dump is your mom's. That's savage. Optical Art is in here. If you didn't see him, he probably blocked you. Let me see. Let me double check to make sure that was the real one. That was odd. That's weird. I clicked go to channel and it brought that up. That's different. I don't know. Did he just get banned? Oh, I know why. Because it's trying to bring me to studio.youtube for some reason. That's very strange. There we go. This is Optical Art. There you go. Ta-da. Very different. But does crypto. Does TA. We do very different stuff. Shout out to him. May he forever have his shouts out. Look at the dollar. Dollar slipped more than Bitcoin there, it looks like. That's weird. I wouldn't expect the dollar to see weakness off of this 50 BPS unless here's the only kind of scenario is, all right, then we would say all of this was baking that in. You know what I mean? Like this was the 50 BPS bake-in. We see a retracement, maybe down to like, I mean, you could even say 100, but like maybe down to like 98, 96. And then we see how the dollar responds. Then maybe it falls, finds support, starts baking in another 50. Who knows? Who knows? Not I. But I'm here to speculate. I have a license to speculate, baby. Oh yeah. Oh yeah. We've got less than 20 minutes until Sir Lord Chirpow himself is live. Get hype. Get hype. That's right. USD down 3% more than ruble. We haven't looked at USD rub lately. A little oost rub. Maybe we should look at Oosterub. Wow. That's something. Ain't that something? That's something. Let me see. Maybe from here. He got support at like 83. It was resistance. I know it's funny. This has the crypto. This has the crypto pattern. Just a very long one. Ascending lows, flat top. That's actually kind of spicy. The market kind of maybe was baking in whatever, this whole like thing from a long time ago, from 2015. That's weird. USD rub. Saw swing low to swing high, and we're back at the 618. It's like kind of standard price action. If you lose 69.30, I think you're looking to come back, kind of just test like wherever we want to cut this. We'll cut this here, 82.5. I mean, if this then bounces from here, you have yourself a very clean uptrend. This was explosive, though. And as we said about the dollar earlier, and that's literally being reflected here, is parabolas cannot go on forever. They have to expand and contract. They can't just expand. Does not work that way. Math does not allow it. Something I'm going to share with you guys I haven't shared, but I look at every day. I'm going to share it with you now. And I'm a little worried about. This is Bitfinex longs, okay? And so Bitfinex, it's just one exchange. No, it doesn't like command the market. Like, I don't know. But we do tend to see these longs and shorts. We do tend to see them kind of have suspicious timing. Let's put it that way. Yeah, suspicious timing. So when Bitfinex has very high longs, it isn't usually bullish. When it has really high shorts, it's usually more bullish. And so what I don't like is we're seeing on the weekly here, this is kind of maybe inverse head and shoulders play out with a neckline right here. If we see a break, we may see a bump and run, and really high shorts on Bitfinex, not historically good for price action. But there is something that I kind of want to point out here that's important. This is your alpha for the day. You're going to get more value out of this than you're going to get out of anything else you hear today. July 19th, yes, 2021. We saw shorts were at basically an all-time high on Bitfinex, but that day was a very important day. It was a very important day. I don't know if you remember, but I'll show you. There you go. Bitfinex, like look at that timeline. Bitfinex longs started rallying January 21st. Which doesn't really line up with what I'm saying that well, because that's back here. But longs are rallying into the low. Longs get closed. Price gets to go back up. So I'm not loving it. Interpret this the way you will. This is just how I see it. There has been some mix-ups here lately that don't fit perfectly. This used to be a really good indicator. It's kind of like an OG thing. I don't know people really even use it anymore or look at it because there's so many leverage exchanges. Bitfinex at one point was the only one. So that's why we looked for it. Not loving that. Not loving that. Dang, we are getting some volatility today. This pattern looks familiar. Does this look familiar to anyone else? It looks like what we've seen on a bigger time frame. Right here, baby. Right here. I've got the eye for patterns. That definitely looks like this. Yay or nay? Yay or nay? Let's hide them. Flat. Flat. Oh no, this dumped first and then went up. Huh. They're a little different. This was flat, then up. It was flat, higher high, lower low, and then went up. This is flat, lower low, higher high. Oh, that's not good. That's not good. Don't really. I wouldn't worry about it, nor would I make any decisions based on it. but it just caught my eye. Caught my eye. All right, less than 14 minutes till Mr. Chirpow joins us. That's right, Mr. Chirpow. 50 already. 50 BPS. The decision is in. Look at all these wicks on the 5-minute. Look at like leading into the 2 o'clock time. Look at how little wicks, how tight price was, how like tight the price action was. Yes, every candle has a little wick on top and bottom, but they're tiny. They're like little stubbles, right? Then all of a sudden, in the 5-minute before, you start getting these big wicks. Into the decision, big wicks. Next 5-minute, big wicks. Next minute, wicks on both sides. Look at the volatility that's kind of shaking in here. This could get very spicy. We could see a large move in either direction. I like. You opened up a long on F. Let's check on my long. Ugh, my long was up like 250 earlier, now down to 150. Well, I guess we're still having steaks. Still getting steaks for dinner. We got 1,000 watching. Wow, it's like the old days, man. I wish we had these meetings every day. This is some of my best content, though. I agree, so I don't blame you. Make sure you've liked and subscribed. You know what? We've blown past 420. We've blown past 690, 690. Let's get to 1,000 likes. I don't even remember the last time we got 1,000 likes. I think we can do it. We have 1,100 people here right now with 750 likes. We're already 3/4 the way there. We could make this happen now. This could happen today. Where'd you get your glasses from? Just go to Google, type in polarized mirror box frame sunglasses, and you'll find similar ones. I can't send you them because they don't sponsor me. I refuse to say who makes these. Blowing through, eh? Got you, big bring facts. How you doing, dude? Lee Groves, your wife rules. You know what? I believe you. But she's dope. Dino Mike, how have you been, Dino, man? It's been a long time. Good to see you, brother. Antonio Del Saro, thanks for your insight. Thanks for being here, my friend. The title is not long enough. They sell them on Amazon. They do. What's up, Crypto Gamer? Who else is here? Good to be here, Johnny C. Good to have you here. Only down. Really not. It really hasn't gone anywhere. If we look at it, it really has not gone anywhere. Even Crow has not moved. It was at 30 cents when we started, still at 30 cents. This is the 5-minute. So these are not huge price swings. Don't freak out. Ooh, I still got that cough. Just not as bad. Honestly, here are our major levels into this, right? Into this meeting. Gotta need water, one sec. David Andrews joining us saying the 50 BPS is priced in. The only thing confusing is the Dixie dropping. It's exactly what we just said. Literally exactly what we just said. It is weird to see the dollar dropping, and we kind of, this is what we kind of speculated was maybe it's dropping because this was the pricing in. Now it's announced there was no shakeup, no changes. Maybe we see a retracement, and then we see a baking in of the next 50 BPS. That's kind of my theory here. It's just trying to put reason. I can't find my chart. Trying to put reason behind chaos. It's not an easy task. Let's get rid of all these. Was it this? I don't know where my chart went. I'm annoyed. There we go. All right, here's like the only things that matter right now. So this is on the 5-minute. So everything looks crazy. None of it's crazy. Whoa, 9:15. That's not right. I had that on the wrong spot the whole time. I bet someone said something, but I just did not read it. Here's the values that matter for Bitcoin right now. Above us in this hourly, 39.2. We break above there, things get a little spicy. Above that, weekly. This was the weekly bullish engulfing line that was rejected earlier, 39.463. And below us, crap, I just moved that accidentally. Below us, 38.5 38,473. That is monthly, weekly, all kinds of support. So a break of that level is something. A break of these resistances above is something, and honestly, everything in between is just nothing. There's just not a lot of movement. So there's your majors. As long as price is within this area, nothing's happening. But that's okay. That's okay. Whew. We're all gonna make it, that's right. Wait, crap, I missed it again. Love these Fed meetings. I'm better than Ozark. I mean, this is my best content. I agree. Thank you. Thank you. Thank you. I asked like twice or 3 times and I keep missing it. I should probably stop asking. I want to know, is something wrong with Crypto Lifer? Maybe I should just Google Crypto Lifer. I'm dying of this cough all of a sudden. Oh well. If anyone knows it, I'm going to try to read the chat. If this thing happened to him, or is he just like, I don't know. Was he like bullish and went down or something random? We can look at Ape. Did we call the top on Ape? It's looking like it. Back to 1415. Nice. I don't like this double bottom. I don't like the double test of support. I honestly, guys, with the way that the whole like land thing went with Ape and the Bored Ape Yacht Club, I think they lost a lot of public trust. I was only bullish on this from a technical level back here. And even though I was bullish on it at a technical level, I told you guys over and over and over again, I'm not going to trade this. I don't want it. It's just a centralized just token. Doesn't mean it can't go back up. I don't know. From everything I heard about that mint was terrible. And if I was like a Bored Ape bro, I'd be pretty pissed. I would not be like knife buying their token, you know what I mean? I'd be pissed. Half basis point raise is correct. It is correct. This meeting is gonna be starting up here very soon. I thought I heard someone say it. Can we look at Cardano? Oh, Crypto Lifer had a fever yesterday. I'm not that. I think I've done something with Crypto Lifer on maybe on BitBoy on ATB or something. I'm not the most familiar with him, but you know, let's send our good energies. Let's send like our good energy, our prayers to Crypto Lifer, that he gets better, breaks that fever, and joins us healthy and happy again soon, right? I think that's fair. Okay, sick no busy. Thank you, Ryan D and Grit PB. CNN released the news. We already have the news. Crypto Believe. We already have it. Pump or dump says dump it. Renice says dump it. Are you guys want to dump it? Let's do a poll. Dump it or pump it. Dump. There we go. Let's see what you guys are feeling. Let's see what your feelings. All right. It's interesting that we've lost a few viewers. We were at 1,100. Now we're down to like 975. It's interesting because literally this whole event, Powell, the live event, starts in like 4 minutes. So buckle up. Go grab a beer. You have time to get a beer. You have time to roll a J. Roll up a smoke. Have a dart. Leave the tab open. Relax and chill. Crypto Banter and Jeb live streaming. Oh man, are people encroaching on my live FOMC thing? No, I'm just kidding. I certainly don't own it. Though I don't know. I think I am the first person that like started streaming them kind of like regularly. Maybe not in the world, but like in crypto Facebook. Crypto YouTube, I can't speak. I think so. I don't remember seeing anyone else do it before I started doing it. Maybe they did though. I don't know. I don't really care. We can all stream it. Hopefully we have more viewers. But you're right. That is almost certainly why it dropped down a little bit, because these other people. trying to steal our show. Nah, I'm just playing. Just playing. 3 minutes, 51 seconds. What do we do? What do we do? We have to go grab drinks. Grab drinks. Grab smokes. Get some popcorn. I don't know. Because it's about to start. Let's all get ready. Let's get ready. Pump it. Pump it. Pump it. Let's pump it. Grab a dart. I'd have a dart. I don't smoke darts anymore. I only vape. Honestly, vaping is just way better. You can do it inside. That's what I love. And if you're in the South, you can just do it anywhere. Nobody cares. You can like do it in a hospital. People are like, that's your right. Hit the vape, grab a drink, smash the likes and subscribes. Join the Discord. That's a good thing to do. You have enough time for that. Join the Discord. All you have to do is hit the green checkmark emoji on the message when you join in the verify room. That's it. If you do that, you will get all of the airdrops that we do there. We do an airdrop after every live stream. Get a little free crypto. That's right. That's right, baby. That's right. Getting it dirty. Fishing for fun. Can I analyze ETH, please? Well, we have 2 minutes till Powell speaks, so I don't think we're going to start anything right now. I don't think we're going to start. After, we'll see how we're doing. My thoughts on PYR, never heard of it. Guten Tag, I love your live streams. Well, Guten Tag, I love your name. I love Guten Tag. Thank you, man. Appreciate you. Is the Ukraine conflict still having an effect? I mean, globally, yeah, definitely, you know. I'm going to vape. Mr. Powell's going to be vaping it up, I think. Ooh, here we go. 2 minutes to go. Bitcoin getting a little bit of that green. No, that's so B. So B. No. Oh my god, I'm gonna be so trolled. No, this was the best ever and it was about to start. Are we back in? Did we get rugged? Were we rugged? Who rugged us? I think we're still rugged. Oh, there we go. Maybe I have connection again. Did we get rugged? Was that a live rugging? Is that what it feels like to get rugged? I've never been rugged. Oh no. Oh no. Uh-oh. Whew. I don't know, guys. I don't know if it's gonna work. I'm seeing if I can get all of the internet connected devices turned off. Go team, go. I think we just got rugged. We just got rugged with 13 seconds. 13 seconds till this thing starts, and we're gonna get rugged. All right, people like Billy are why we can't have this up now. You are like the reason we can't have the live stream up or the live chat up because can't take it seriously. So it says we're back live. All right, my connection looks stable. That was very weird. It's still not super stable. I'm gonna kind of real quick here try to just like close down some of the things on the computer that might be taking up resources. What a bummer, dude. Right as we go live. All right, let's make this. We didn't miss anything yet. Mr. Chirpow. Chirpow. Mr. Chirpow. Chirpow. Chirpow, Chirpow. Oh, Mr. Chirpow, I have a question, Chirpow.
Good afternoon.
Oh, good afternoon.
Nice to see everyone in person for the first time in a couple of years.
It's very nice. It's very nice of you to say. Thank you.
Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people.
Thank you.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
Yes.
After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels.
Where is Gina?
Assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Retweet this. Let's get Gina to marry me.
Nick Timmeros of the Wall Street Journal. Chair Powell, the unemployment rate at 3.6% in March is now essentially at the level that the committee had expected would prevail over the next 3 years, and at the bottom end of FOMC participants' projections for the longer run rate that you submitted in the projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of slowing hiring without pushing the economy into recession? Thanks.
Thank you. So you're right, 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months. Very, very strong, particularly for this stage
I'm getting hitched.
of the economy. And so we think with fiscal policy less supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation.
Bunch of lies.
Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation.
Yeah,
your third question was
that's
your
kind of
level
how
of
we got
confidence
here.
that you can slow hiring without pushing the economy into a downturn.
So I guess I would say it this way. There's a path. There's a path by which we would be able to have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. There are 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy, sort of the vacancy unemployed curve, the beverage curve. We haven't been at that sort of level of a ratio in the modern era. So in principle, it seems as though by moderating demand, we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance to have a soft or softish landing or outcome, if you will, and I'll give you a couple of reasons for that. One is households and businesses are in very strong.
Gina is my future wife. Please retweet so that she has to say yes.
Balance sheets excess in the sense that they're substantially.
You'll see her soon.
Trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very strong. And so it doesn't seem to be anywhere close to a downturn. Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So, but I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control. But our job is to use our tools to try to achieve that outcome, and that's what we're going to do.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration.
He's not.
Why 1 month or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
That's legit a good question.
Point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data and the evolving outlook, as well as to financial conditions. And finally, of course, we will be communicating to the public about what our expectations will be as they evolve. So the test is really just, as I laid it out, economic and financial conditions evolving broadly in line with expectations.
Okay, so remember, that's the same guy who said there wasn't inflation, it was transitory, now we're having an inflation crisis. So whatever he says, you got to take it with a grain of salt.
The core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel like we're making some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So, we're leaving ourselves room to look at the data and make a decision as we get there.
That makes sense.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate, or
I don't think 1 month is not no 1 month's reading doesn't tell us much. We want to see evidence that inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower, but we're not looking at that as a reason to take some comfort. I think we need to really see that our expectation is being fulfilled, that inflation, in fact, is under control and starting to come down. But again, it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is if we see what we expect to see, then we would have 50 basis point increases on the table at the next two meetings.
Thank you. Thank you,
Colby. Thank you. Colby Smith from the Financial Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So, neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it down. So it's a concept, really. It's not something we can identify with any precision. So we estimate it within broad bands of uncertainty. And the current estimates on the committee are sort of 2 to 3%. And also, that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously to what we see as the broad range of plausible levels of neutral. But we know that there's not a bright line drawn on the road that tells us when we get there. So we're going to be looking at financial conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. You know, you're going to raise rates and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
Mr. Chair Powell.
Thanks, Chair Powell. Neil Irwin with Axios. Do you see evidence that inflationary psychology is changing, that in areas like workers' wage demands, businesses' willingness to raise prices, do you see evidence that there is a psychological shift going on inflation? Thanks.
So
we don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply. Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels where they were in 2014 by some measures. So
this is weird.
You can look at that, and I think that's a fair description of the picture. But it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're doing that, but there have been price shocks. So I just think it takes you back to the basic point, was that we know we need to expeditiously move our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately, or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't run that risk. We can't allow a wage price spiral to happen, and we can't allow.
He's just saying nothing. Something actually interesting going on. Bitcoin it broke past that hourly and go, Gina. Shh.
Thanks, Chair Powell. Gina Smilik with the New York Times.
Shut the hell up.
You mentioned in the statement both the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder what you meant to convey by adding them. I wonder what you meant to convey by adding those.
Well, so we...
Shut up, pal.
Our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices and food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market, where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine and the situation in China, they're likely to both add to headline inflation, and people are going to be suffering from that. You know, people almost suffer more from food and energy shocks then, but even though they don't actually tell us much about the future path. So, but the second thing is that they're both capable of preventing further progress in supply chains healing. And so, or even making supply chains temporarily worse. So they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way, they're two further negative shocks that have hit really in the last, 60 days, 90 days.
Victoria.
Hi, Victoria Guida from Politico. I want to follow up on
let
that
Gina
because
talk, ma'am.
you all have obviously highlighted
Ma'am.
that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved, since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. Again, if you look at it, it's essentially almost 2-to-1 job vacancies to unemployed people. There's a lot of excess demand. There are more than 5 million more employed plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that, because we can have more of an effect on that. But it would be a very difficult situation. I mean, we have to be sure that inflation expectations remain anchored, and that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Here we are, baby. Weekly. Can we get Gina back, please?
Howard Stein
Chappell.
with Reuters, and
Chappell, Gina,
nice
please.
to be back. So two questions. One quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects
This
through
is a nice
stock
little
market
pump.
channels? Equity markets broadly down quite a bit since late fall, first of the year. How are you mapping that into household consumption? Have they come down enough? Do you need another leg down in equity values to think that households are going to stop spending at the rate you need them to stop spending?
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we got to get to that. It's really, you've got to get to a place where the labor market appears to be more in balance. And that depends not only on the level of those things, it depends on how well the matching function in the labor markets are working, because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at, I think when we got to 1-to-1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we're looking at ultimately inflation. So there are a bunch of channels through which policy works. You can think of it as interest-sensitive spending, and then you can think of another big one as asset values broadly. And there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too.
Rachel.
Chappell, can Gina speak, please? Gina, marry me, Gina. I don't think she heard it.
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, What is your message to the American people about when they will start to feel the effects of, say, a 50 basis point rate hikes or multiple hikes? How do you explain to them what that does to their grocery bill or their rent or their gas bill? Thank you.
We got a weekly and daily bullish engulfing as of
The
this.
first thing to
Candle
say is that
LFG
we
Bitcoin.
understand,
Smash the likes and
some of us
subscribe.
are old enough to have lived through high inflation, and many aren't. But it's very unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing.
I hope this meeting
if you're
never ends.
a normal economic person, then you're probably don't have that much extra, to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy, and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for. Perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, back in balance, so that the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates. So higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either. But in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. We think we have a good chance to do it without a significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank you, Edward. Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
What level of concern?
So the economy is doing fairly well. We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market. If you look at the labor market, for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course, given events around the world and fading fiscal policy effects and higher rates, you could see some slower economic activity. Certainly it will not be. Last year was an extraordinarily strong growth year as we recovered from the pandemic. As I mentioned, growth over 5%. But most forecasters have growth this year at a solid pace above.
Our next TP got sniped. It's like a penny under.
Have advised Democrats and Republican presidents who both said that the Fed is so far behind the curve on inflation that a recession is inevitable.
This guy knows.
So, and as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment. Now you have surplus demand. So there should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance, and they're famously blunt tools. They're not capable of surgical precision. So I would agree. No one thinks this will be easy. No one thinks it's straightforward, but there's certainly a plausible path to this, and I do think we've got a good chance to do that. And our job is not to rate the chances. It is to try to achieve it. So that's what we're doing. There are a range of opinions, though, and that's only appropriate.
Steve Dorsey.
Thanks, Steve Dorsey, CBS. You mentioned earlier, just now, fading fiscal policy. Do you feel that the Fed has been supported enough from policies at the White House and in Congress in combating inflation?
You know, it's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity, we take it as a given, and we don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there, and we look at it as our job to given all the factors that are happening, to try to sustain maximum employment and price stability. So, if the Congress or the administration has ways to help with inflation, I would encourage that, but I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on focus on doing our job.
Chair, I probably shouldn't be giving anybody advice. I don't
lane.
know what the hell I'm doing. I shouldn't be the only person that should know what they're doing.
Steve Matthews with Bloomberg News. A number of your colleagues have said that rates will need to go above neutral into a restrictive territory to bring down inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, and the soft landing is the big hope of everyone, would this FOMC have the courage to endure recessions to bring inflation down if that were the only way necessary?
So I think it's certainly possible that we'll need to move policy to levels that we see as restrictive as opposed to just neutral. We can't know that today. That decision's not in front of us today. If we do conclude that we need to do that, then we won't hesitate to do it. I'll say again, there's no bright line, that you're stepping over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is better than the other one. It's much more about practical application of our policy tools. And we're absolutely prepared to do that. Wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. But I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test. It isn't will we do one particular thing. I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And so it's really essential, particularly for the labor market. If you think about it, if you look at the last cycle, we had a very, very longest expansion cycle in our recorded history. And in the last 2-3 years, you had the benefits of this tight labor market going to people in the lower quartiles, and it was, racial wealth and income, not wealth, but income gaps were coming down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. We have a pandemic. We have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity, patch in half. And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side.
We're up $350,
we need to somehow find price stability
out
of this.
That's right.
And it's obviously going to be very challenging, I think, because you do have numerous supply shocks, which are famously difficult to deal with. So I guess that's how I think about it.
Hey, Chris.
Cheers.
Thank you. Chris
Steaks,
Rugaber and
baby.
Associated
Steaks
Press.
all day.
Earlier, you just said that if necessary, I think were the words, that you would, or if it turned out to be necessary, or you said it's possible that we'll need to move policy to restrictive levels. Given where inflation is and the hot economy is, or certainly the hot labor market as you described it, why still the hesitation? I mean, shouldn't it be, what else do you need to see in order to determine that?
About 350.
Wouldn't the Fed naturally be looking to go to a restrictive level at this point? Thank you.
So if I said necessary, I meant to say appropriate. We're not going to be erecting a high barrier for this. It's more if we think it's appropriate. You know, the point is we're a very long way from neutral now. We're moving there expeditiously, and we'll continue to do so.
Expeditiously.
And we can't make that decision really today. The decision about how high to go will be on the table to be made when we reach neutral. And, you know, I expect we'll get there expeditiously, as I've mentioned. So it's not that we don't want to making that decision today wouldn't really mean anything. But I'll say again, if we do believe that it's appropriate to go to those levels, we won't hesitate.
Hold up 1 second.
Mike McKee from Bloomberg Television and Radio. The balance sheet, why did you decide to wait until June 1st to begin letting securities roll off and not immediately start in the middle of this month, say? And do you have a newer or a better estimate for the monetary policy impact of letting the balance sheet decline? And then finally, I'm just curious why you felt the need to address the American people at the top of your remarks. Are you concerned about Fed credibility with the American people?
So why June 1? It was just pick a date, you know, and that happened to be the date that we picked. It was nothing magic about it. We you know, it's not going to have any macroeconomic significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I mean, I would just stress how uncertain the effect is of shrinking the balance sheet. You know, we run these models, and everyone does in this field, and make estimates of what will be the how do you measure, you know, a certain quantum of balance sheet shrinkage compared to quantitative easing. And, you know, these are very uncertain. I really can't be any clearer. There won't be any.
We hit 40K. We hit 40K, baby. Oh, wait, maybe not on Coinbase. God. $28. And Gina would have had to marry me.
Course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller than that, by the way, and some of you may have read about that. That's kind of a mainstream estimate. We know that it is part of returning to more normal, more neutral financial conditions. And, you know, our strategy is to set up a plan and have it operate and really have, you know, have the interest rate be the active tool of monetary policy. In terms of speaking to the American people, I feel like sometimes I want to remind us really that that's who we work for, and that it's inflation that people are feeling all over the country, and it's very important that they know that we know
almost
how
up
painful it is,
$400.
and
Let's
that we are
go.
working
I'm
hard
buying
on
Gina
fixing
a ring.
it. I thought it was quite important to do that, and so that was really the thinking behind that.
I'm buying.
Do you think the Fed has a credibility problem?
No,
$400.
And a good example of why would be that.
Gina.
So. In the fourth quarter of last year, as we started talking about tapering sooner and then raising rates this year, you saw financial markets reacting, you know, very appropriately. Not to bless any particular day's measure, but the way financial markets, you know, the forward rate curve has tightened in response to our guidance and our actions, really amplifies our policy. I mean, it's monetary policy is working through expectations now to a very large extent. We've only done 2 rate increases.
Number 2.
But if you look at financial conditions, the 2-year is at 280 now. In September, I think it was at 20 basis points. And that's all through the economy. People are feeling those higher rates already. And so that shows that the markets think that our forward guidance is credible. And I think that's, we want to keep it that way.
Scott Horsley, did you have your hand up? Okay.
Next TP, 40,744 LFG, dude. We're up $400 bucks.
Brian
This trade
Chung
was
with
down
Yahoo
250
Finance. To
yesterday.
expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses, and wondering how you kind of square what might be demand destruction. Are you already seeing that? Is the idea here to incentivize a lack of spending, to decrease consumption,
Higher high
to
on
perhaps
Coinbase.
table business investment?
Who cares what that guy's saying? Higher high on Coinbase does look like we just broke 40K on Coinbase, and that officially means Gina has to marry me. As we stated earlier in the episode of his 40K, Gina has to marry me. That's the law. I don't know. I don't make the rules. LFG.
2% inflation. And so what our tools do is that as we raise
Smash the likes and subscribes, guys. Don't be stingy. Let's get 1,000.
Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Greg,
Oh yeah, we're making money on the trade.
Thank you, Chair Powell.
I'm
Greg
getting
Rapp from
married to
MarketWatch.
Gina. I'm changing my name to Tom Powell.
I was wondering if you could take a step back and talk about, in March, the dot plot had, looked like steady quarter-point rate hikes, get the funds rate up to 2% at the end of the year. Now, it seems like you're much more aggressive. So could you talk about the thinking that's behind that? Thank you.
Look at that beautiful giant.
So, look, I think what you've seen is
perfect for the honeymoon.
Really, I would say last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the jobs numbers, it looked like the job market was much more even and stronger in the second half of the year, but that hadn't happened yet. Anyway, we got an ECI reading.
Our crow trade's up too. We're making mad money today.
Before the November meeting, and we got a really strong jobs report. Then we got a really high CPI report, and so I think it became clear to the committee that we needed to adjust and adapt, and we have ever since then. Really, ever since then, we've been adapting. The committee moved by the time of the December meeting to a meeting of 3 rate increases, then to a meeting of 7 rate increases at the March meeting, and that process is going on. And it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast-evolving situation, and that's what's happened. You can see, unanimous vote today,
the rest of our
course, and I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right. And by the way, other forecasters have been doing the same thing. And it's just us adapting to the data and to the situation and using our tools to deal with it.
Thanks. We'll go to Nancy for the last.
No, let's go back to Gina. She needs to say yes
Hi,
live
Nancy
on
Marshall-Genzer
television.
with Marketplace. Chair Powell, I want to ask how you're able to balance your dual mandate, stable prices, and maximum employment, especially when the unemployment rate for black workers is still roughly twice the rate for white workers.
So unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So that's one thing I would say, and that's important. But the bigger point is this: I do not at this time see the two sides of the mandate as in tension. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not over time be consistent with 2% inflation over time. And of course, everyone loves to see wages go up, and it's a great thing, but you want them to go up at a sustainable level, because these wages are to some extent being eaten up by inflation. So what that really means is, to get the kind of labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution, especially them. To do that, you've got to have price stability. And we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by inflation, and where we can have a long expansion too. That's the good thing, is you can have, as we've had several of the longest expansions in U.S. history have been in the last 40 years, and that's because it's been a time of low inflation. And long expansions are good for people and good for the labor market. So that's the way I think about it. I think we, our tools work. We have to think in the medium and longer term, and I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions. Thanks very much.
Put Gina back on. What kind of bullshit is this? You're just gonna leave? Gina's only gonna ask one question. You're just gonna be done? It's crap. It's crap. It's crap. God dang. God dang it, Bobby. The live event has now ended. What's up, Manja? Joining us for my happiest day of my life. The beautiful Miss Gina. I've asked her to marry me via Twitter. Go ahead, retweet that, like it, comment. Let's see, maybe she hasn't seen it yet. It only got like 25 retweets. Maybe she needs 100. I don't know. I don't know. All I know is that she will be my wife. That's all I know. That is all. That is all I know. Trying to do something here. Wonder if I can make this more obvious. There we go. All right. Well, that was a nice little pumpy. Nice little pump skis through the meeting. Gina did not get back to me, so that they're just gonna put a pin in it for now. She's busy. She's working. Those are all reasons maybe she didn't get back to me. I made this a little zoomed in so we can see. We are up well, not anymore. We were up like 390. We're now up 344. This trade, yesterday, was down $150, $200. You guys, I was tweeting it. I have no ego here. I'm not afraid to show losses. But now we're back up. That just shows you how trades can turn. Just on a dime. Just 1 second it's this, and then boom. Now you're not underwater. I wonder where I should put this. I don't know. Well, that was about what we expected. Powell. We didn't hear. Maybe they're getting wise to us. Oh no. What was that? What? I don't understand what just happened. I'll just get rid of this stuff. Maybe they're getting wise to us. I noticed that there was a distinct lack of chirpows. Did anybody else notice that? At least chirpow once. What happened to the good old days? Just a few months ago. Chirpow, 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 chirpow. It's all right, guys. I'm going to marry Gina. We're going to change our name. I'm going to be Tom Powell. Tom Powell. She's going to be Gina Powell. And we're going to have beautiful Bitcoin children. That's pretty much it. So during that speech, we had I will say that's the most volatility we've had. We saw a little volatility building up in the last few days, and this meeting seems to be kind of a little release of that volatility. I didn't really get to highlight it too much during it, but we had what looks like a broadening wedge pattern here. We then surprisingly broke out the top side, broke the top trend, and so what we're looking for to complete this pattern is a back test of that trend. Now we can say maybe on the 5-minute that already happened right here. I usually don't put stock in that real low time frames, at least an hour or something for a pattern like this. But this pattern isn't even visible on the hourly, so maybe that 5 minutes correct. But what we got, we had these important. Who remembers? We were saying there's 3 important prices here during this speech, and that is right here at 39.1, because that's where we're looking for this hourly to close to have a bullish engulf. You see what happened. You see what happened after. We have 38.9. That was if we flip the hourly to red, but then more importantly, we have our weekly, monthly resistance or support down here at 38.5, etc. And anything in between was just sideways trading. The Fed meeting had some spiciness for us. We broke to the upside, closed that hourly. Now we're on top of what this broadening wedge could be. Traded up to 40K. Not bad. Not bad. I'm not going to lie, I did not see this coming for this. I was almost giving Gina an out by saying if, Bitcoin is 40K, we get married. It was almost like giving her an out. I don't want to pressure her. I want her to love me for me and the way I love her for her brains and her beauty. But I'll take it. Our trade during that live, actually, we closed, during that speech, we closed 2 more. We took profit 2 more times. Let me scooch this over. Took profit 2 more times right here. 10 contracts at 3,944. And I guess an extra 2 at 3,944. Okay. I don't really remember that happening. Doesn't matter. We took some profit, as we're always doing, as good trading always is we are always taking profit. We're still up $150. We've closed $31 in realized profit here. That's not a ton, but we were down at the start of this episode. We were down like 15 or something. I don't know. So we're back in the green, baby. We're back in the green. Shaved off some of those extra contracts. The chart now looking much better. Even Crow. That's the wild part. Even Crow. We went long, 28 cents. We're looking to buy again at 25. It didn't come. When we started the stream, we're at 30 cents. We're now 31.1. Even Crow is going back up. Wild. Here's the real takeaways. We're going to do these takeaways, and we'll see if there's anything else we want to talk about. The weekly, above 39.5, we have a weekly bullish engulf. We have not had a green weekly candle, much less a bullish engulf, in the past 5. Probability, I'll say we close green this week, as I think we've only closed 6 red weeklies on Bitcoin ever in its 13-year history one time. So watch 39.5. That's going to be the important level right here. If price falls back below in the next 4 days, closes below 39.5, the weekly chart doesn't look so strong, but in its current condition, looking pretty good. The daily also bullish engulfed. Almost every time frame now bullish engulfed. And that will be true above 38.5. That's our very important support level. So in the next 24 hours, let's just do a hypothetical. Say we close right here today at 39.8. We might go higher, but say we do. Tomorrow, we may expect price to sell off from wherever it closes today. We might expect it to sell off back to that, back to this solid support, 38.1. If we see that happen, 38.5 holds. Boom. I'm expecting likely what will be a 3 candle long setup, and I think we'll see higher highs. I do. That's what I'm thinking. MACD was not like this earlier. Earlier, it was not. Now we have a positive momentum candle on our MACD for the daily. The chart is starting to tip. Things are starting to go in the right direction here, and that's good news. It looked like crap. The chart looked like crap earlier. Now it's looking pretty good. Let's watch how this daily closes out. Fingers crossed it holds into the weekly. I love watching these with you guys. Of course, we will do it again next week. We're also live here almost every day. If you're just tuning in for the FOMC meeting, we're live here like all the time, constantly putting out content. Please join our family. subscribe, jump in the Discord. We're going to do a larger than normal airdrop after this live stream. All you have to do is be in there, hit the green check mark to verify. That's it. Costs you nothing. You know what? I haven't shilled this. Check out the r/cryptocurrency podcast. I host it. Links in the chat that will show you all of our past episodes. They're timeless, so you can watch the first one. It has just as much value as watching the most recent one. They're not based on kind of like what's happening now. They're bigger picture stuff. Very quality podcast. Let's see. Discord. Retweet that tweet. We have to get Gina to marry me. That's the most important thing. Period. So hopefully you've jumped in Discord, you've liked, you've subscribed. It's always a good time watching these with you guys. I had fun. Shout out to our sponsors, Market Cypher and FEMX. I know too many times this time, but I'm just getting used to it. Links in the video description below. FEMX is an exchange I've been using for years. Market Cypher, an indicator I've been using for years. Quality stuff. I've long before we had any kind of partnership, I was using them because they are the best in the business. I love you guys. This was a wild stream. I think we hit 1,200, 1,300. We had well over 1,000 viewers. We had well over 1,000 viewers, and then the internet connection crapped out, and we kind of just floated along at 1,000. It's been a spicy day. We got over 1,000 likes. Love you, fam. Tune in soon. This has been a great one. I will say this. If Bitcoin breaks over 40.4, if we break 40, let's see. If we break 40,400 today, right here, if we break this high, we'll go live again. It'll be a double stream day. We'll double dip. So watch 40,400, set an alert, be in the Discord, be ready because that was a weird announcement. The dollar dumped on a rate hike and Bitcoin went up. The markets are definitely a little confused right now. Love you all. Thanks for subscribing. We'll be live very soon. I'll see you in the Discord. Crown out.